All right, let's talk about NIO, because today was one of those head-scratcher days for the stock. It started out looking really promising, but by the end of the day, it was a totally different story, leaving a lot of people confused. So what in the world actually happened? Let's investigate.
Okay, so check this out. Before the market even opened, things were looking great. NIO was hitting a high of $4.84. But then the opening bell rang and the whole script just flipped. The stock ended up sinking to a low of $4.56, which means all that early excitement, poof, gone. Just a really frustrating turnaround.
And this is the number that tells the final story of the day, down 1.08%. Now, it's not some massive crash, of course, but it's a dip into the red that just doesn't seem to make sense, especially given how strong the morning looked.
And that really brings us to the big question, right? You've got all this great news swirling around the electric vehicle world in general, so why did NIO's stock end up going down? We're going to try to piece this puzzle together.
So the first clue we find actually has nothing to do with NIO itself. It looks like there were much bigger things at play. These external forces that created a kind of downdraft across the entire market, making it really tough for any one stock to swim against the current.
Okay, so here's how that domino effect worked. First, we got signals from the Fed that a rate cut in March probably wasn't going to happen. That one piece of news was enough to spook the whole market, and things started to dip. What happens then? Well, all those trading algorithms, the computers that trade automatically, they saw the dip and just kicked into sell mode. And just like that, NIO got pulled down right along with everything else, no matter what its own story was.
But here's where the plot thickens, and what makes this whole thing so baffling. While the big picture market was getting shaky, the news specifically for Chinese EV companies was actually incredibly positive. This is the stuff that should have pushed the stock up.
Get a load of this number, 57.2%. You know what that is? That's the slice of the EV market in Russia that Chinese brands grabbed last year. That is a massive, massive figure, and it points to really strong international demand, exactly the kind of thing you'd think would be great news for a company like NIO.
And there's more. Over in Europe, which is a huge target market for NIO's expansion, EV sales actually beat gas-powered car sales for the first time ever back in December. I mean, that's a gigantic milestone. It shows a huge growing opportunity. So with all this bullish news in the background, the drop today seems even weirder.
So to really understand what's going on, we have to look past the headlines and follow the money. Let's dig right into the trading data for NIO and see what investors were actually doing with their cash today. Now, at first glance, the options market seems to tell a pretty simple story. A whopping 67% of the options trades were bearish. That means 2 out of every 3 bets were basically saying the stock was going to fall. So on the surface, it sure looks like a lot of traders were expecting a bad day.
But, and this is a big but, here's where things get really interesting. While a lot of smaller bets were against NIO, the big money, the institutional investors, they were doing the complete opposite. Just look at these huge block trades. We're seeing massive buys, hundreds of thousands of shares in total, and barely any sells. It really seems like the big institutions were using today's dip as a chance to buy in on the cheap.
And a lot of this quiet buying was happening in what are called dark pools. Now, these are just private exchanges where the big players can trade huge amounts of stock without tipping off the rest of the market right away. And today, the activity in these pools for NIO was unusually high. That tells you the big money is definitely paying close attention here.
And just to make the picture even fuzzier, even some of the short sellers, the folks betting against this stock, were starting to back off. They returned or covered almost 500,000 shares today. That means they were closing out their negative bets. So yeah, the situation is complicated, to say the least.
So with all these conflicting signals flying around, let's turn to the charts. Sometimes the technicals can give us a few clues about where the momentum might be headed, at least in the short term.
All right, so here's what the chart is telling us. First, by closing down, the stock price dropped below its 10-day moving average. That's a technical sign that some of that recent upward momentum might be running out of steam. But, on the other hand, another key indicator, the stochastic RSI, is sitting right in the middle, at 64. It's not signaling that the stock is overbought or oversold. It's basically in no man's land right now.
So, for the next few days, here are the key numbers to keep on your radar. There's a really strong floor of support right around $4.51. If the stock can stay above that, that's a good sign. To get moving back up, it means to break through 2 ceilings, first at 467 and then that previous high of 483.
So what are we left with? Well, it's a fascinating showdown, isn't it?
On one side, you have the bearish bets and the market pulling things down. On the other, you've got amazing industry news and giant institutions quietly buying up shares. And with NIO's monthly delivery numbers due out any day now, the big question is, which side of this tug-of-war is going to be right?